Hi everyone, I hope you are all safe and healthy with your family and friends. In this video, we are going to learn about 11th Standard Accountancy, Chapter 3, the books of prime entry. Today's video is, we discuss about two approaches of accountancy. What are they? They are the modern approaches of accountancy and traditional approaches of accountancy. Let me see one by one in detail. First one is modern approaches of accountancy. In accountancy, modern approaches are classified into 5 categories. What are they? Assets, liabilities, capital, revenue and expenses. Let me see one by one in detail. First one is assets. What is meant by assets? Assets is nothing but any physical things or rights owned that has a monetary value, that is called as an asset. The assets are grouped and shown separately. For example, plant and machinery, land and building, furnitures and fittings, stocks, computers, trucks, etc. So these things are called as an assets. Okay, why these things are called as an assets? Why? Because the company owner has control over it. When a company owner has purchased those things or these things, or they get it on rental basis or lease basis, whatever it is, they have a rights to control over them, over these things, and they will get future economic benefit from them. What is meant by future economic benefit? I will explain you with 3 examples. Let you understand clearly. Okay. The first example is when you take machinery. When a company has purchased a machinery, from now this machinery will use for at least the company expected, let's say 6 to 10 years. Then the company own it, they have a right to control over it. The machinery will give the future economic benefit to the company at least 6 to 10 years. So the company installed that machinery into the production department. Then they produces some product from that machinery and they sell it into the market. The company generates sales. The company get revenue. The company generate revenue from that product through the machinery. So the machinery is called as an asset. Here we listen 2 points. What are they? After purchasing machinery, a company own it and they have a right to control over it. And the company will get future economic benefit from that machinery at least 6 to 10 years. So that only the machinery is called as an asset. Are you clear from the first example? Come to second example. Take a building, land and building. If the owner of the business or company, you will use the building for commercial purposes to run the business or to operate the business. They will get the revenue from that building. They own it. So the company have a right to control over the building. The building will give future economic benefit to that company at least 10 years. Okay. So the land and building is called as an asset. Why? Why? Because we listen here 2 points. What are they? There are 2 reasons. The building is called as an asset. Why? Because the building will give the future economic benefit to the company at least minimum 10 years. And the company own it, so the company has a right to control over it. Okay. Then come to third example. What we take? Take truck or computer, whatever it is. Okay. After purchasing a truck or bus or car, whatever it is, it will use to that company at least 10 to 15 years minimum. Okay, so the company own it, so the company has a right to control over to the truck. The truck will give the future economic benefit, so that then only that truck is called as an asset. So these things, what are these things? Plant and building, plant and machinery, furniture and fittings, computers, stocks, trucks, buses, etc., etc. These things are called as an assets. Why? Because these things will give the future economic benefit to the company at least more than many more number of years to the company, and the company own it, then only the company has a right to control over it, then only these things are called as an asset. Okay, I will see you in next video. Thank you.